I know from reading your notes that the technicals do not look great right now. Just how bad do they look in the near term?
Well, Brian, everybody's trying to put into the perspective, is this a bottom or is this just a bounce? And I think the answer is this is just a bounce. There's just not enough technical evidence yet to say that a true bottom has been set. And when you go through and you just simply look at the charts, look at all of the Microsofts, look at Apple, look at Adobe, look at all these large cap names, they're all in very easily definable downtrends at this point in time, Brian. So as I look at this market, I look at the setup, it looks like you got another 7 to 10% downside. We've been kind of honing in on around this 3,500 level, Brian, on the S&P 500 as where we will likely find some support. And perhaps at that point in time, we can find our footing. But right now, the Fed is not our friend. And interest rates are certainly not our friend either at this point in time. And the Fed is clearly going to keep raising rates to try to push down inflationary pressures, which means likely more pain for equities.
Well, we've had these gut-wrenching days, Craig, where you get, 30 to 1 downside volume to upside. The VIX pops 20%. You've got no stocks on the NASDAQ 100 that are higher. We've had a couple of those days, and yet the market still has not found a bottom. What are you looking for? I know there's not some big flag, hey, market bottom here, but is there one thing over something else that you're watching for, Craig? And don't say, yeah, for stocks to stop going down. I know that.
Brian, you mean nobody rings a bell at the bottom here? I mean, that's shocking, right? No. In all seriousness, what we're looking for is we've got some indicators we're looking at in terms of market breadth. Those market breadth indicators, Brian, have gotten to levels that have been commensurate with prior major downturns. You and I have talked near the lows in 2020, 2018, in those periods, and even in 2007, 8, 9. Those indicators are getting to those levels. But I'll just say this, Brian, it's only been the first week that we've gotten to those levels. And this washed out breadth indicators that we look at typically will be anywhere between 6 to 10 weeks in this sort of washed out state. We're week 1. So again, I think it's going to take more time. But I want to see that breadth measure wash out. I then want to see a little bit of an improvement and expansion in that. And that'll be sort of, for me, the indication I'll be looking for to step in and get what I could define as a tradable bottom, not maybe the bottom.
But here's maybe the big headline is that you are sticking by your end-of-year price objective of 47.75, I believe it is, Craig. I mean, that's bold. That's big.
That is big, and that's about 27% upside from where we are now. And certainly we've gotten a lot of pushback from investors as to why we're sticking with this. And the answer is really history. So when you go back and you look at these weak first halves like you have discussed, there are indications from June to December, you can get a 20+% advance from here into year end if the breadth of the market starts to improve. When we look at our indicators that measure that market breadth, Brian, when we've gotten to these levels, we see this breadth expansion that happens. I often think about it as sitting on a beach ball inside of a pool and watching that breadth expand very quickly. We can get 20, 30% advances in a 26-week period of time. It has happened. And that's exactly what I think will likely happen again once the Fed comes back and says, we've sort of accomplished our goals. Inflationary pressures have come down. Yeah. I think the market will respond very quickly.
But that's it, right? We've got to, history says, along with the charts, we have got to have the Fed pivot. We've got to have the Fed change their tune, maybe at the Jackson Hole conference in August, some are suggesting, right?
Absolutely, it could be that. And then don't forget about midterm elections coming. It could certainly boost investor confidence.